February 2025. We had two trades that we took during the London session. One was on GBP CHF, and the other one was gold versus the dollar. Okay, so we're going to start off with the GBP trade and our reasons for taking the trade. So if you cast your eyes back to this area up here where we have this bearish FVG and the London swing point. Okay, so the first hour of London was this candle. As I've recently been trying to explain to a few people and been explaining in my videos, this is the first hour of the 4-hour candle in which London session is. Okay, so what I mean by that is if we go up onto the 4-hour chart, I know I've explained this a few times, but I'll keep doing it for myself and for anyone who needs to have that information. Okay, so we go back. This is the London session 4-hour candle. London kill zone starts at 2 a.m. So that's when I start trading. But if we're bearish, which you look here, okay, wasn't really giving us any indication to be bearish at this point going into that candle. We just swept the low here and closed back above. So really, ideally, people were looking to go long. The reason I was going bearish is because, one, we had this swing point, but more because of this 1-hour candle. Okay, so people in my group will know that I didn't actually trade anything here, didn't trade anything in this candle either. I was mainly focused on getting in on this candle, and I'm going to show exactly why. Okay, so when you mark it out, you can see we have the 1-hour FVG here. Okay, easy to spot. Everything in here, which I don't pull these 1-hour FVGs just off of, because I just do it off of eye now because I know where the levels I'm looking for. But if you actually look at that, the 50% level or consequent encroachment of this FVG is tagged once, tagged again on this first hour of London. Now, once this gets tagged into and closed back below, which it does, it closes below the previous hour's high. Okay, so again, you can just pull this along. I wouldn't do this live because you don't need to once you know what you're looking for. So close below previous hour's high. Okay. This is how, when I was beginning, and what you should do if you are starting, is you should mark out your charts something like this. Okay. So you know now that price is closed back within the range. So you can use the 1, 2, 3 pattern or the CRT pattern, whatever you want to call it. Now, where would our draws be? Well, you've got this level down here, okay, which was a swing point. It's already been swept once, but that means people would have been longing from here, leaving their stops down here, which is an area of liquidity, or a DOL. And then we have our main draw, which is down here where price is still gravitating towards as we speak. Okay, so if we delete them off, okay, just to keep the chart nice and clean, cast your eyes to it again and just remember this pattern because it's very powerful. You can see what's happening and why. Okay, so this big downward move that we have in London, as you can see, at one point it was all the way down here. The reason that happens is because on the 1-hour chart, okay, we've got the pattern we're looking for inside an FVG, okay. On the 4-hour, we've opened, okay, then we've made the high, which is this level where the London high is, okay. So then when price closes back in the range, we now think, believing we're bearish off of the 1-hour candle, that price is going to have some sort of distribution to the downside because you've had an open, a high, then we're looking for a low, and then price to close. Okay, so the distribution part of the 4-hour candle during the London session is the area that we're targeting to trade. Okay, it's the most probable. If you can get your pattern and however you want to call it, whether it's a pattern or CRT or FVGs, whatever you look to trade from, if you see that happen in the second hour of the London session or the second hour of the New York session, where you're in a 4-hour candle, you have got a high probability of taking the trade and getting a profitable trade. Okay, so you can see what did price do. So we made the high here, then price goes back below. So this is the third hour of the 4-hour candle. We distribute lower, okay, to this level, and then price comes back up, and ultimately it closes here. Okay, so you can see the open, high, low, close form. Okay, this is literally based on this. Okay, let me just draw this out actually how it looks. Okay, so you got, this is the low off of this candle here, and then we close there. Okay, so that 4-hour candle now looks like that on a 1-hour candle. This is standard. This is pretty textbook, and it looks exactly like how the drawings do when I've shown you them and put them into my Discord, okay? So you're looking for this. This is on the 1 hour, but this is based off of that 4 hour candle forming an open, a high, a low, and then the close, okay? Anyways, so we've got a 1 hour chart, and what we seen was this close back blow within price. So my eyes were cast to just target the lows, okay? So when we drop down to the 5-minute chart, you can see how I got my entry and why I took it. Okay, so we got the Asia level here. Asia light don't need to be taken because price during that first hour in the London session has closed back within the range. Then you see here 3 a.m. starts and we have a big distribution to the downside. Okay, market structure shift occurs at, I took it off the 3-minute, so it occurs at this level here. Okay, you've got this market structure shift level here. Boom, price really cleanly distributes to the downside, comes back in, tags into the 3-minute FVG and goes lower. Now, I always advise just to take it off the first FVG in case price runs without you, which is really frustrating if you're trying to get the 50% level of the range or however else you would like to trade it. Okay, so again, you can see this would be a good example. 50% of the range was tagged. You could have took your trade from, let me just move mine over. Okay, so that was my entry. You could have took it like this. Okay, you'd have got probably a better RR, or so you'd have got nearly a 1 to 4. But I tend to just take it for ease of, just to make my life easier. I just take it from the start of the FVG and then I'm done, and I can walk away from my screen. So you could have took this. It would have been 1 to 3. Okay, but however, we did actually just take it off the start of the FVG. And that was the basic trade. It's very easy to see, very clean, and what you see straight away is on most of the time frames then, or all of the time frames were in sync obviously, but you had the 3-minute FVG tagged and filled, price reacts off of it really cleanly, pushing to the downside. When you go up to the 5-minute, it's super clean. Okay, we did also have the 5-minute market structure shift here, and then tags into this FVG, tags into this one. It doesn't even close above the first FVG, it just dips into the second, but closes perfectly. Then price rallies down. At this point, once you see price down here, we're well over 1% in profit. So to be honest, I moved to break even. When we had this little pullback, I did move my stops. So I was at break even. I moved my stops just above here. The reason I moved it above here is because this swing point now becomes protected. Okay, why does it become protected? Because it's within an FVG, and also there's no reason, if price is still bearish, to go back above this level. Okay, so this is how it looked live. Okay, I had my stops here. Okay, and then that's how I would have traded it. Okay, but the reason I was more aggressive with pulling the stops down was because this was a liquidity level that I was sure price would react off, which, as you can see, it did. Price pulls back near enough tapping break even level if people did stay there, and then obviously it continued to the downside, hit 2R quite easily. Okay, so very clean setup here, and as you can see, if we pull this over just a tad, you can see this is the 1 hour chart to my right. Price comes, makes its close back within the range, heads to the downside, distributes, and then ultimately we close here. It was a little bit of a longer running trade today, but nothing that's sort of out of the blue for me. It's quite normal to be in a trade within 1 to 3 hours, so it's not a big deal. And to be honest, like I said, once we went break even, eyes are off the screen and it does what it wants, and I'm not too bothered if I get a break even or a win. At that point, the work's been done. So yeah, lovely setup there. Second trade that we took, which wasn't too much after this original trade, was on gold versus US dollar. Okay, so I don't tend to trade this much. As you can see, both the targets are actually absolutely smashed as well. But wow, this is my first time seeing that live, literally as it's happening. So why did I enter this trade? Okay, this one has a little bit more context behind it. Well, if you look here, this is the 1 hour chart, and this is what I was seeing during London. Okay, you can see it here. First hour of London, again, moves lower, tags into this FVG just over here. once it tags into that FVG and closes back within the range, it's very, very simple. It's a pattern that you just need to master and understand that it works so many times. It's so profitable. It works so consistently. 1 hour FVG tagged into, price closes back above the range of the previous candle after sweeping it. You've now swept liquidity. It now has no reason to continue lower. Okay, so we close back above previous hour's high. Okay, equals bullish. Very simple. This is all I do every day. Okay, we had the Asia level that was intact at the time of taking the trade. We had this previous day's New York, which has just absolutely been obliterated through. And you can see price does play around a little bit, but why doesn't it take it? Okay, well, I'm going to explain why it doesn't take it, and this is something that people need to have your notebooks for and write down, because it's something that took me a long time to understand. This trade is absolutely obliterating to the upside, by the way. So this is the 1 hour chart, okay? And if we make all this stuff only visible on here for now, okay? Let's make this visible and below, okay? When we go to the 4 hour, again, this is why I'm trying to explain that the 4 hour holds the key to everything within the kill zones and the London session and the New York session. Can you see it? It's super, super clear, okay? This is the external range that we're looking to target, okay? The internal range is here, very clear, okay? That 4 hour candle right there, this 4 hour candle here is where the 1 hour chart is moving from, okay? Now, what has it done? It's also swept the previous 4 hour candles low. Okay, this is consolidation. We're not involved in this. This is yesterday's market move in and overnight in Asia. But then you see the main move in London. Okay, we sweep the previous 4 hour candles low. Once you drop to the 1 hour, it becomes super clear to see. Okay, this is the same move. This is the first hour on that 1 hour on the 4 hour chart. Okay, price sweeps it, closes back within the range. Now, why does this become a low that's not going to get ran again? Why do we have our stops where we had our stops, which you'll see? This becomes a protected low because price has no reason, once it's took liquidity, tapped into a PD array, it has no reason to seek lower prices now. If you're on the right side of the market, price will run higher or lower depending on what way you're trading. But if you see this occur and you have that 4 hour context with it, there's no reason for price to go against you. And you can walk away from the charts with peace of mind knowing that there is no reason price is going to do anything out of the ordinary. Now, that doesn't mean you're not going to have days where it does happen, because it does. Sometimes the algorithm, the market doesn't work out the way you want it to. But the overall win rate for this is way, way above 60%, which is more than enough to be a really, really profitable trader. Okay, so we got the 1 hour. Now, you're going to see exactly where I took the trade from. This is the trade that I took. That's literally obliterated as New York started. Okay, this is the 1 hour chart. Obviously, there's a lot of candles here. Normally, I only have the 3 open for the trade that I'm actually taking. So if I pull that to the side there, this is how it looks live for me, as people see when they trade with me in my group. Okay, and you can see we had this Asia level here, which I had liquidity targeted. And then the main draw was just up here, which happened to be around my 2%. Now, I like this when this happens, when my 2% level is on the liquidity area. Okay, and that was the main external range as well that we marked out. So here we see, okay, we have this bearish FVG. Now, what does price do within that that 1 hour candle when it sweeps and closes back above? Well, this is where price closes, okay? Look, you can see 3 a.m. candle, okay? We closed just here. We're inside this bearish FVG. The reason I didn't take the trade from anywhere down here, okay, because you're thinking, oh, but it's closed, is because what could have happened is price could have made a new low, and it would have been the next hour where we would have got the entry. Okay, and as you can see, price did play around. But once we inverse this, because this become an inversion FVG, once we make this move to the upside, we have a market structure shift just here. If we could pull that on, I'll mark up the charts just to give context for people who might not be in the group and a little bit new. Okay, and we can use this as an inversion. This now becomes a level where I just don't want to see price ever go through. And if it does, you're probably going to get cooked, and that'll be you. Okay, and you can see we have this order block level here, okay? Now, this order block level I marked in real time, and the reason I'd done that was because of this pullback here. So we took an entry off this, it was just about here to be fair. but due to spreads, it probably wasn't. It was probably just a little bit higher. But the FVG I was taking it off was this 5-minute gap. Okay, so we just zoom into price. Okay, this is how I was looking at the chart. We had this inversion FVG here that I marked in orange. Okay, which you can see price tags again, the 50% level of this. They're really, really key. The consequent encroachment of FVGs, once you've had distribution in the direction you want to go, is really, really powerful, and price can bounce from it. But what do we have overlapping with this 50% of the inversion? We have an order block. So once price tagged this, I said it in my group, and I said it to people that were trading this trade with me, the order block's been tagged. Normally, order blocks are used as a springboard, and you can see price does rally up. Okay, it comes back, and ultimately it plays around a little bit, but then look at the power that it has once it does make the move. Okay, so let's make it nice and clean and clear, because I don't mark everything up on the charts. We have the 5-minute FVGs. Again, I'm pretty sure I wouldn't pull this, but if you pulled it, yeah, just into the discount area as well. People like to use that. I don't personally, but I can see why they do. It does work. So, but yeah, that's the trade for gold. That also hit 2R just now. I personally closed out at 1R just here because I'm up 3% for the day. I didn't really see the need to be greedy. I'm assuming people did hold, and congratulations to them. They've smashed 2% on 2 different trades today. So you've got this trade here, 2% hit, and then you have our 2% trade on the original trade sent out today, which was this. Perfect trading day. Overall, 4%'s been smashed out of the markets, and for me, I hit 3% for today.